Very good afternoon or very good morning, everyone. Charles here, Frgnt Daily Chart Analysis. The time is approaching 10 minutes to 10 local time here in Milan. Week 21 of quarter two, ready to start all over again. So, as we always do, we look to start from the top on the DXY. I would say, pardon the illustrations to begin with. I was busy with Frgnt Mastery this morning, and that is also hence why no chart analysis has been posted. However, starting in the here and now, of course, DXY, the catalyst, where I love to begin my analysis for the day's plays, looking to understand where are particular turnarounds on that index. Not trading the index this week, haven't traded it for a couple of months, to be honest. Just figured it's best use it as the higher time or highest level of confluence, and then use the fact as I would look to trade the DXY as an index, then use that as confluence on the cross pairs to then look for more of a confluence and more of a reason to actually look to enter a position on a correlated pair or just on a cross pair in general. So weekly time frame, we finally filled the imbalance towards the upside. There is a line here which illustrates a bearish weekly order block. I'm not putting that on the chart because it would just clog it up tremendously. However, when you start to refine that weekly order block down, as you guys know, I like to short from as high as I possibly can within a refined area, and of course long from as low as I possibly can. So refine within this tremendously large weekly order block. We are in and around this region, up at those highs on that daily time frame, looking for a potential rejection from that area. So I believe on the DXY that would be the best probable area for a more realistic rejection. Of course, there is reason for price to want to gravitate up towards those areas. We still got a little bit of that market gap to be filled, as you can see illustrated here on that 4-hour time frame. It is still there. So of course, looking for price potentially want to have every reason to fill that gap, push up into the liquidity beyond that gap by way of daily order block. Once you start to refine that area down, here we are at the highs or within that daily order block by way of 4-hour order block. That is very much so still available. In terms of the here and now, however, of course, using the DXY as the catalyst for confluence, would I be willing to short the DXY now as a result of this break of structure? Well, it still remains to be seen. I'll be honest with you. There is a reason to anticipate price to want to turn around from this area. However, we don't have any higher time frame confluence actually backing that position just yet. Simply basing our analysis off 15-minute time frame only. So, could this be considered a break of structure? I would say yes, it certainly could. However, up at those highs, I would like to see some more confirmation before looking to, let's say, short the index and, for example, then take a long position on a cross pair, or let's say to short US dollar CAD, which we can have a look at in a moment. Of course, supporting the short position down, price closed beautifully just below that weekly 50 EMA. So of course, we've got an entire week now to use that 50 EMA as confluence for DXY bearishness, understanding that price has every likelihood to close below that weekly 50 EMA, just as it has done, let's say, for the previous month or so. As prices come into that 50 EMA, we've rejected it, we've closed bearish for 3 weeks ago, excuse me, continue to keep with that bearish momentum, and then last week we did close bullish. However, look at the importance of that weekly 50 EMA to the T is where we have closed below that weekly 50 EMA. So of course, like any EMA, I am expecting there to be a slight breach towards the upside, final liquidity beyond that EMA before then rejecting it for the week. So it would make absolute sense for price to want to gravitate up towards these areas. But in the back of our minds, we must understand that the weekly 50 EMA on that weekly time frame is the importance. So let's have a look to see how that's going to play out at the moment. Of course, as we start to go through a bit of the analysis, you are going to see a tremendous amount of illustrations on the chart, where Frgnt Master and I went through this morning, pre-London live, to understand what the plays could be for the day. So, of course, US dollar, GBP CAD, looking at either way, to be quite honest. The long positions, price hasn't really come into that higher time frame 4-hour order block just yet, and I'm waiting for that to materialize. However, as I mentioned this morning, if we do get this bullish 4-hour candle to close in the manner that it's looking to push at the moment, then of course we'll look to be more reactive with the market, place a 4-hour order block in and around those areas, and look to manipulate that order block to potentially take price higher. So what I'm really looking for price to do is start to break those structure points on the 15-minute time frame to give me the incentive actually to start looking for those longer positions, because as you can see, based on price action and structure, we are still very much so bearish on GBP CAD. In the immediacy, looking at potential Asia range shorts, I don't have the range from this area, unfortunately, based on an Asia range short, so I will be looking at shorting GCAD from these highs if price is able to get there. I like that based on basic structure on the 15-minute time frame only. I also like that based on the fact that I'll be trading alongside the 4-hour time frame, of which admittedly is previous history at the moment. That is last week's type price action. However, until we start to break those highs and then pull back, I will remain bearish on GCAD. So trying to find a nice opportunity to get in a GCAD short. Rolling through, I won't go into too much detail because we'll be here for absolutely ages. GBP yen, pound yen. So having a look this morning at a Asia range short as well. However, price came into that 15-minute order block just before London closed, so it's no longer can be determined as an Asia range trade. As a result of that, we've had a bearish engulfing candle close from that area. So what I've done, I've just simply placed a 15-minute order block in and around that area. I'm just seeing if I can get a reaction from there. So I better put an alert there to see if we get a reaction from there. If we close above, then the thought process is well and truly finished. But at the moment, interested in a potential GJ short, we'll just have to have a look to see how that plays. That is simply based on 15-minute time frame only. As you can see, we're very much so within the range. So the short element itself is a bit of a risky play, I must admit, hence why no positions have been activated just about yet. I just want to see if this order block is worth actually shorting from. So I want it to show me something first and foremost. But you can see my overwhelming thought process. I would like to have a break of that area, which is a key structure point in my opinion in the market, as a result of most recent lows coming out of that area, out of that region somewhere is where the low was created. So of course, once price comes back to that area, I'd expect a reaction from it. I'm just seeing if I can gain that reaction and whether or not that reaction is worth actually shorting down. So that's where I am at the moment. Of course, if we break those highs, pull back into an area of interest by way of this 4-hour order block down at the lows, there isn't a 15-minute order block for me to look to manipulate just yet. Therefore, I'm going to have to wait for my entry criteria before looking to take that long towards the upside. US dollar, AUD USD, Aussie dollar, US dollar. So where are we in the here and now? Of course, weekly order block looking to take price out of that towards the downside. Once we start refining those areas down, you can see right up at the highs. Again, best place to look for a position. Once you start refining your areas down, the higher within your refined order block, in my opinion, is your most probable position for entry. Nevertheless, where are we in the here and now? We have approached that bullish structure on that daily time frame. What you can see is on that daily time frame, the most recent high was created from, again, somewhere in that region, just here on that daily time frame. Therefore, of course, prices now return towards that area, looking for us to refine those areas down to understand if we can gain a reaction from there. I myself, I will not be able to take long positions, unfortunately, as a result of being still within that higher time frame weekly order block, where my overwhelming bias is short bias out of it. Therefore, I have no business with longing into a higher time frame weekly order block, despite how beautiful it may look. However, those of you that don't take into consideration higher time frame in terms of weekly time frame order blocks, and of course I can quite understand why I'd be looking to take a nice long position into a 4-hour order block. Yes, it has been mitigated, however, price is respecting it beautifully. We are at that bullish structure point based on the daily time frame, where the daily 50 MA also is keeping price towards the upside. So it makes absolute sense just based on the daily and the 4-hour. I'm just looking to understand how this current 4-hour candle is going to close within the next hour. If we can have that closing bullish, look to restart that process again by way of 4-hour order block, and then you know how the saying goes, we'll start to refine that area down, and hopefully so from that 4-hour order block within this area there is a 15, which there's not, so hence why you can see my illustration just here. For those that pay attention in the morning to me, that's exactly, if I were to take it, which I'm not, that is exactly how I would be looking to take that position. So that's AU, but of course you can see my overwhelming best case scenario is price comes back up to those highs, which of course, as I've just mentioned, I won't be involved within that long position, but most certainly I'll be looking for aggressive shorts on AU based on the fact that we are trading out of that higher time frame point of interest, refined down, and I've already got my area just at those session highs based on that 15-minute order block, looking to short down for potentially the week down towards that daily 50 MA, down towards the 4-hour 50 MA, where price has a good range towards the downside. So that's AU. What else do we have of the day? EU is also looking quite good in terms of if price can come down to these lows. Daily order block, the only daily order block available that gave price the most recent push. What I mean by that is, of course, price was making those lower lows, lower highs, lower lows. Price came into an area, failed to make continued lower lows. We then had that push, not quite a higher high, but nevertheless we have broken structure points to the left-hand side. Therefore, when price comes back to the area, all I want to see is a reaction coming out of that area. Then we've got that daily order block, supported nicely down at those lows by that weekly 50 MA. So as I've said, we are a bit of a distance away from that area now. Hopefully towards the end of the week we can utilize, I would say, not just use but utilize the weekly 50 MA towards the upside to have that rejection for the week, and then have a bit of liquidity coming out from those traders that love to use the weekly 50 MA, such as myself. So that's what I've got longer term for EU in terms of the here and now. Potential Asia range setup may be playing out. There are a couple of reasons why I wouldn't like to take this position. So I do see that there are much better Asia range positions out there. And more of the reason why I don't like this position is Asia is available here, so I can quite understand what I do with those in the morning. If I am to draw my position on, where would I, in an ideal scenario, want to put my stop loss? So here is kind of position number one, and then do I have the range down to fill Asia? Absolutely not. So of course, if I then want to start protecting Asia highs to the left, which I can definitely see price wanting to gravitate towards, then I stand absolutely no chance of that risk to reward. What I'd have to be doing is something along the lines of that, which of course doesn't even cover this wick area here. So I'm very, very, very much so not going to be taking that as an Asia range. However, what I have understood is it still can be a structure point in the market where if I'm going to take them inverse positions based on that DXY weakness coming out of the market, what I do want to see first and foremost is price break that structure point, pull back into an area, give me this type of entry criteria before looking for the long. So yeah, although I won't be looking to take a position from this order block and structure point, I do think it's very important if you can understand when price breaks those areas that naturally you are anticipating price to reject from. If price breaks from those areas, then of course it's all good news to take a position when price looks to return back to the position in which price broke the area from. So that's EU at the moment. GU, again, GU is providing a bit of an Asia range looking type of setup. Again, is it a setup that I'll be looking to take potentially? Potentially. Again, Asia range, I trade two strategies when I'm trading. That's higher time frame directional type of stuff that you see when I refine my areas down from the weekly down daily through 4 and 15. And then of course the Asia range criteria, that it only takes in consideration a 15-minute time frame, 15-minute order blocks, 15-minute structures, and that really allows you to trade in line with intraday perspective, particularly when you don't have any higher time frame bias that's backing your position. Now is a great opportunity to look to utilize those Asia range setups as a result of how that weekly candle closed on pretty much all time frames, where there isn't really any areas to look to manipulate in favor of shorting. Therefore, we go for the Asia range and just simply base the strategy on 15-minute structure only. So as a result of what we can see here, we've made a low in the market, price come up, lower high is confirmed as a result of that lower low. So of course, when price comes back into that area, I'll be looking for reaction to potentially fill Asia down to those lows and get out of the market. On the flip side, if we break that area, just like on AU and EU, have to have some significant areas broken up to the upside before looking at any type of reversal positions towards the upside. So that's what I'm looking for now. You can see the alerts on the chart. We'll just put one above as well, just in case I miss everything. US dollar CAD, so we're looking at potential DXY weakness coming out of the market. How do we gain that opportunity? How do we gain that in terms of confluence. So we can see that the US dollar CAD currently in a bit of a 4-hour range. We can understand why. DXY is up at those highs, looking to reject potential weekly 50 MA. There's also a gap towards the upside that price wants to gravitate up towards and fill. Order blocks up at those highs as well on the DXY. So in contrast, so that US dollar CAD is using that DXY confluence to want to start to actually push price down, but with the confusion, the conflict that there is reason for price to push up towards the upside. And of course, US dollar CAD intraday perspective, we are looking incredibly bullish, but we're bullish into a 4-hour order block where price would immediately want to roll bearish out of. So you can see the confusion, you can see the conflict, and that's what's very important, to use your DXY as that catalyst when you're looking to trade. So how do I look to trade this? Again, by the illustration, you can see the best type of operation and the more aggressive type of operation up at those highs. So of course, as always, I want structure points to be broken at least on the 15-minute time frame for me to feel comfortable that I'm taking a high probable setup once your intraday perspective structure is broken in the opposite direction. And of course, it's all systems go. What that'll look like for me, hopefully, is going to be a bearish 4-hour close out of this range. And like on anything, we've had a range, we break out of the range, pull back up into those highs, which would be these highs here for that nice looking short position. So I like US dollar CAD shorts. As you can see, nothing in the immediacy whatsoever at the moment, just looking for price to develop. It is Monday morning, must be mindful of that. A lot of trading days left of the week. And UJ, not a lot being offered aside from Asia range. As I've just mentioned, when price starts to move in one direction without any real time of pullback on the higher time frames, the best you can do is look to take an Asia range position. Hence why I have put my two strategies together across my trading, and therefore I'm able to take positions even when the higher time frame directional stuff doesn't really align. So UJ looking for a break of structure, pull back into a 50-minute point of interest, and you can see I've marked off here how I would look to take that position. Ideal scenario is already there, just waiting for me, and alerts are on the chart. So that's UJ. We'll look to see if the entry criteria is going to present itself. And again, all systems go for UJ. So a lot to dissect, to be honest, this morning. But again, it's all making for a nice week ahead. So I hope that little 20-minute breakdown is helpful for you guys on your trading journey, or even if you're within your trading journey. It's just my take on the markets I've got thus far this week. All the very best in your trading journey, team. You will indeed hear from me at some point throughout the week. Do take care. Trade well. Charles.